All right. Last night, I was actually an expert at the Expert Lounge at Aria Group here in San Diego. Great audience, man. Great crowd. I really loved it. But I love real estate people, man. Real estate people, man, they just have a different thought process about the world. No one gets into real estate unless you want to be successful and be like super rich, period. But there's a way to go about doing it. So the challenge for most real estate investors, and you correct me if I'm wrong, just tell me if this is right. There are so many strategies out there as it relates to real estate investing. That's the problem. The number one reason why real estate investors lose money, number one reason, is they aren't committed to their strategy. You got to know what you want your money to do. 100%. That's the number one thing. The number one reason. So I'm going to use my board. We're bringing, what side? Whatever side. You guys. Nah, I'm too dark on that side. I'll stay over here. So the thing that I wanted to share with you guys, like this video, for the number one reason why investors lose money is because they haven't committed yet. So the number one thing you got to do, number one, is you got to commit. Right? You already know you're gonna, like, you don't invest in multifamily real estate to not get rich, to not become super wealthy, to create wealth. That's not buying a house. It's not flipping a deal. That's not assigning a contract. That's not a fix and flip, a wholesale deal. None of that stuff. We're talking about actually investing, taking your hard-earned money out of the bank or retirement account and moving it into an actual investment, an asset, right? So the number one thing you got to do is you got to commit to that. You know you're going to put it into something long-term. Too many people come around and go, ooh, this guy came and he was talking to us about investing in like a senior assisted living. And the state's going to lease the whole thing from us. And we're going to do a lease and we're going to sandwich leases to the state. And they're going to pay us cash flow. Dude, that might not work. It might not work for you. So it's almost irresponsible to teach somebody a strategy like that is new. Or even if you're not new, like even if you have $1 million and you haven't done that before, you are new. In MMA, we had guys who boxed that came in to come do wrestling and jiu-jitsu with us, and they would get slaughtered because they wanted to learn like this high-flying thing. And we're like, dude, look, you got to start off with just learning the positions, man. You got to learn the positions first. Commit to the position you want to be great at. Then you add to that. Same thing with this. Commit to the position you want. What are you committed to? If you're going to commit to multifamily investing, for me, I'm a conservative, man. I'm extremely conservative. I want a great location. The location is key. Then a great property. Location first, property second. Then it has to cash flow. Then it has to already be full and successful for some period of time. So it has a proven track record. It's a proven asset. It's a proven vehicle that consistently makes money, right? It's like buying a business. Like for us, 150, 200 units, 250 units, 300 units. That's what I'm talking about. That's a commitment for me. That's what we look at investments in. So number two, once you commit, then you have to know. I know this is kind of principle based, but I'm going over principles rather than tactics. You have to know, one, what it is you're investing in. Multifamily, we talked about that up here. I'm committing to put my money in multifamily. That's something to consider. We're talking about not losing your investment dollars. You got to know you're going in multifamily, right? First you commit, then you know. Like, I'm going to know. So you're going to get all the information you need about multifamily assets. You're not doing this fly-by-night strategy of, I'm going to buy something, blah, blah, blah. You're not bargain shopping, none of that stuff. You're investing your money to get a return, right? So once you know that, number three, you need to know what you want your money to do. What do you want your money to do, right? Do with your money. For us, one, we need cash flow. It's got to cash flow when we buy. It's got to pay us. It's got to pay our investors. It's got to do everything. All of my partners are my investors. You would be a partner in a deal, right? You want cash flow every month. Your bills come every month. AT&T bills, T-Mobile bills come every month. Lease, your rent comes every month. Your mortgage comes every month. Your real estate also should pay you every month. Monthly cash flow, positive cash flow, passive income if you're an investor, right? That's how we do it. Next, you need to know 100% that there's some appreciation. That's for appreciation. Like at some point, as the values are going to go up because rents go up. We're going to always be raising the rents. I got one job as a fund manager or overseeing any asset is to make sure our management companies continue to press the issue on raising the rents. So if we know we're going to be raising the value of the property, this is something I want our money to do. Appreciation how? I want to make sure that at the end we get a minimum of double our money. So we know we're going to cash flow, and at the end, we're going to hit a double or a triple, right? Because most of my deals triple. But that said, I already know what I want my money to do. You as an investor should know what you want your money to do. That's not fly by night. This is, and another thing, I want long. This is a long, I want my money to be in here for a long period of time. Why long term? Is because if you can put your head on the pillow and rest at night and not worry about waking up tomorrow and the stock market went down 5 points, 20 points. What was it? I think it was last week. The stock market lost like 80 billion, I'm sorry, 80 trillion, not billion, $80 trillion in value. If your retirement account, pension stuff, all that stuff tied to anything that was there, it lost. And everyone's like, oh, it bounced back. Bounce back means it has to get back to where it was, which was zero. You lost. Wall Street didn't lose. Wall Street owns 80%. Is 80% of all the stuff you see on NBC, all the stock market, all the capital markets, 80%. That's not the little guy. They're playing with the little guy's money. So when you're thinking about investing your money, 100% commit. Then you got to know where you're going to put it and why. Multifamily assets. Next, what do you want your money to do? And it should be a long-term play for you. All of our deals that we look at are 7 to 10 years. 10 years. One guy I talked to last night was concerned about well, I got to refinance in 3-5 years, man. I'm not sure about that with the debt. You need to be sure about it. As a matter of fact, you want to be like, hey, in 7 years, I can refinance, put more debt. The goal is to never not have debt on it. You don't want any of your multifamily assets, 200, 300, 400 units, ever to not have some form of financing. But that's a long-term thought about what you're doing with your money, with the asset itself, right? So this is the reason why why investors lose money. They haven't committed. They don't know. I'm still playing with it. Maybe we should do dirt. Maybe I should invest with somebody else who's speculating on a land deal or they're speculating on a development somewhere else in Florida. Right? Because we hear these things. People get pitched this stuff all the time. And then next, they don't even know what they want their money to do. Somebody says, hey, man, I'm going to give you 10% on your money in a week. And they go, yeah, I want that. But if you know, hey, I don't want 10% on my money in a week. I want 4 or 5% on my money every year for 10 years. And then I want to refinance. And then I want all my money back. And then I want to stay in the deal. And then later when we sell, I want to double or triple what I had in it, even though I have no more money in the deal and it's an infinite return to me and my family. You want to know where your family's money is coming from. You want to be the Hiltons. You want to be like Blackstone, BlackRock, like your family's money, like your JP Morgan, the Morgan family knows its money is in banking and finance, right? They know that. The Rothschilds family knows their money comes from banking. Like, where does your family's generational money in the future going to come from? It'll never happen if you haven't committed to these things, man. I get so passionate about this, man. It was killing me not to say nothing in that room, to be like, dude, that's bad advice. That's bad advice for probably 1/3 of the people sitting in here. Some people needed to hear it. Some people needed hey, you need to do something. Got it. You need to do something. But you need to know what you're doing and be 100% committed. Next phase of commitment is conviction. Right? The definition of conviction. Hold on. What does conviction mean? The definition of conviction is a formal declaration by verdict of a jury, the decision of a judge in a court of law that someone is guilty of a crime or offense. Number 2, a firmly held belief or opinion. That one is the one that we use, right? That is the root of that word. It's a Middle English word from Latin of conviction, right? Or the verb is to convince. To be so convinced of your position that your conviction to be even found guilty in a court of law, that this is where you are going, to be so convinced, because I can tell you, the more conviction you have, the more certainty you possess. The person that's more certain than somebody else rarely ever loses, right? The more conviction you have, the more certainty you have. That's where your commitment comes from. So if you just think through your investments right now, let's say you have $1 million. You're like, look, I have $1 million, Vic. I want to put it in something long term. I'm not looking for a get rich quick scheme. I'm looking for a create wealth for sure for my family. You already know you're going to be in the deal for a long time, right? So let's say you got $1,000,000. Boom, boom. $1,000,000. You're just one investor in a pool of another 20 of them, right? We're going to do a deal. And I go, look, here's how this will look like. I'm like, hey, man, look, our target is 5%. You're going to earn 5% on your money. That's going to be for 10 years, right? That's $500,000 over a 10-year hold. 10-year hold. You're like, cool. That's just in cash flow that you're going to receive from a property. So you already got 50% of your money back. Dude, that's 50% of your money back. Dude, that's good. Period. And someone, oh, 5% is low. No, it's not. On the quality of asset that you invest in, like we said, you got to know. Like if I'm looking at multifamily institutional quality assets for me and my partners, my investors, 5% is great because banks want 5%. Insurance companies are getting 5% on the returns on those same assets or somewhere in there, right? That's the target. And then later, when we have an increase, let's say we have a 5% increase in income, right? So we know we're going to raise the rents. So that's another